Hey guys, thanks for clicking on this video. Today we're looking at one of the largest companies in the world. We're looking at Apple Inc., ticker symbol AAPL. We're going to be looking at the fundamentals of the stock and then giving my fair value of the stock using discounted free cash flow and the Buffett-Graham intrinsic value. And then we're going to be having a look at some of the technicals to tell us to see what they're telling us. Before we get into it, the stock price, can you please give a like on the video? It really helps me out, and subscribe because I don't want you to miss any of these videos because I'm trying to bring out as many videos as possible. But anyway, let's get into Apple. Current share price is $148.38 a share, just down from its all-time high of 158. You can see it had a good rebound up until the last few days, up until earnings. Earnings was on the 28th of October. And the market reacted very positively and then had a slight pullback. But as you can see, if we just go in the last 5 years, you can see that this stock has been on a parabolic rise pretty much consistently. If we look at all time, I mean, if we go to the log graph here, you can see it's been a pretty consistent upward trajectory. But if we just take that up and go to the last 5 years, you can see this stock really has gone from strength to strength and went on a much bigger rise during the pandemic. Anyway, let's go have a look at my steps. So first, it has a market cap of $2.476 trillion, making it actually the second largest company in the world. At the time of recording this, Microsoft just overtook it. It is in the technology sector, and as said, the share price is $149.81 a share. It does pay a dividend, 0.59%, and the dividend, ex-dividend date, is the 5th of November. So if you want to get Apple's dividend, buy before that date. Firstly, we want to see is the PE ratio less than the market, and yes it is. Apple has a surprisingly low PE ratio of 26.7 compared to the market's 28.5, so that is an excellent pass at the start. Is the revenue increasing? Absolute revenue monster, 265 billion to 347 billion, so that is obviously a pass. Next is the profit increasing just shy of 60 billion to over 86, so that is a lot of profit. These tech companies, Apple and Microsoft, just churn through so much profit. They have such high profit margins, and you can see here revenue and profit increasing, but look at that massive increase. Next are the shares outstanding decreasing. Apple are buying back their shares, which is good for two reasons. The first being it gives the shareholders more value, because if you have one share and there are 10 shares outstanding, then the company buys 5 shares back. Your stake in the company would have gone from 10% to 20%, just like that. And same here, if they've got 19 billion shares and now there's 17 billion, then any shareholder's stake has increased. Also, it means that they think their share price is pretty undervalued, because otherwise they wouldn't be buying back their shares. So that is good news on that front as well. Next, you want to see is the free cash flow increasing, and I'm going to say the answer is yes. 64 billion to 94 billion. This company has a lot of free cash flow on hand, so that makes it 5 passes. Everything's a pass. Free cash flow rate, even with a valuation of 2.4 trillion with just shy of 100 billion in free cash flow, that gives a free cash flow ratio of 26.13, which is very, very in line with the PE ratio, which is good to see. And is the dividend safe? 0.59% dividend. The total dividend they pay is just around 14.5 billion, and with 94 billion in free cash flow, that dividend is very, very safe compared to some other companies where they are struggling to pay their dividend. Apple will pay you a nice dividend, but obviously this is a very growth stock. A growth stock with absolutely solid fundamentals, as you can see here. Next, we want to look at discounted free cash flow, and this will give a fair value of the company. I've calculated the future free cash flows based on analyst estimates, and you can see this is pretty in line with what you're seeing. 2022, 96 billion, 101, 103, 117. This gives a terminal value of the company discounted for today, and with a current stock price of $148, what does the discounted free cash flow say? Well, that actually gives a calculated stock price of $171.52 a share, meaning it's trading at a 15.6% discount. So discounted free cash flow, loving a tech stock, which is very, very, well, not rare, but it just shows how much free cash flow Apple are generating. And next we want to look at the Buffett Graham intrinsic value. This is based on earnings per share and the expected growth rate. Massive expected growth rate of Amazon of almost 20%. So I'm expecting a very good price here. And yes, there you go. Fair value of the company, according to this, is $270.51 a share, meaning it would be an 82% discount if you buy it now. But the most interesting thing I can see here is obviously that Graham price, and the Graham price is named after Ben Graham. It's a buy and hold price. If you see Apple at this price, snap it up. And it's saying anything less than $202 a share is a great price. So obviously with a share price of 150 or less than 150, then obviously it is a buy according to both models. And you can see here, it's a tick on all three. Calculated stock price, discounted free cash flow 170, Graham price 200, and a fair value of the Buffett Graham intrinsic value of 270. So all of the models are absolutely loving this stock. Now we just want to have a quick look at the technicals. So we go on to the year chart. That's my favorite, and we'll bring up my some indicators I like to look at first, and I like to look at the moving averages. So let me just quickly add these in. I've said it before and I've said it again. The time periods I like is the 50, and this is a shorter moving average for me, so I will put it in green. And then what we'll do is we'll duplicate it twice, and we'll add two more, which is the 100-day. And of course, finally, I would like to add the 200 days. So there's the 100-day in yellow, and then finally the 200-day in red. So what do the moving averages tell us? Well, looking at this immediately over the last year, and let's just zoom it out. I'll look at the 200-day first. The 200-day has acted as a support level. Basically, the only time it's broke below the 200-day in recent time is the pandemic, and then that little pullback we had in May. So from 2020, start the pandemic and this new cycle, you can see that the 200 is acted as a support. So anytime the stock price hits that 200, that's a massive buy signal. Obviously we're at 148 right now, and you can see, look at that stock split when the stock went up massively on the split and then pulled back, but you can see it's broke those highs again. So the 200-day tells us that story. We look at the 100-day. Bit of a similar story. The price hasn't really broke below the 100-day in any real time. There's always been some support. Yes, it's come on there a bit, but it's always broke through quite nicely. So that's saying that. And the 50-day, what have we seen recently? Well, we saw a golden cross here, massive buy signal. But then the negative sign is the price dropped below the moving averages, had some support here, then the price broke through. So you can see here, once again, the 50-day is being a pretty interesting support point recently. So we'll see what happens there. So the next ones I like to look at, and let's just kill these off because I can open up more. I like to look at the MACD. MACD is here. So what the MACD is telling me is, if you look at Apple over the time, if you look at buy signals here, when the signal lines crossed, you would have bought it here and you would have sold pretty good money, or if you would have bought here, you could have sold even a bit higher. There's another positive one here. It crossed and then you would have held all the way up. So it looks like momentum is slowing a little bit. But I would say if it slows, goes in the red, I would wait back to the line and cross, and then that would be a definite buy signal. You could buy now and hope that it continues up, but you can see normally it has kind of gone up and down. But if you want to play it safer on the MACD, I would say wait till it goes back into red, and then when on the upswing, when the signal line and MACD line crosses, buy then. And that has been pretty consistent for this entire year. And then finally, I like to look at the RSI, and this is actually quite a good one for Apple again, because if you see, it's currently in the overbought range, trending to sort of normalcy. It doesn't really go on this for long. It'll go up and down quite frequently, but if the stock gets into the oversold regions, that's where the money has been made. You can see there, oversold, and you wait there, oversold, and then you would have made, well, money hand over fist on that run, oversold again, and then you've had a little bit of a run up here. So according to RSI, just I would say wait and see, wait till it gets in that oversold region, and that would be a massive buy signal. Right guys, thanks for watching the video. Please give a like if you've enjoyed it, give a comment your thoughts, subscribe if you're not already, and I'll keep bringing as many videos as I can, and I'll catch you guys next time.